Hello guys, welcome back to my channel. Remember CPI? In my last video, I explained about CPI. Well, the Fed is the boss that reacts to it. Last time we broke down CPI, inflation, and how it works, why it matters. Now let's take it one step further because once CPI drops, the very next thing to move the market is the Fed. And honestly, the Fed is like that one friend who always has the final say in the group. You might argue all day, but in the end, whatever they decides, that's the play. So who's the Fed really is? The Federal Reserve, right? So everyone throws this name around like it's some mysterious club. But it's basically America's central bank. Their job, keep the economy balanced. They don't want inflation running too hot. They don't want growth crashing too hard either. Think of them as the thermostat in your house. Too hot, they crank the AC. Too cold, they turn on the heat. Same thing with money. They raise or cut interest rates to keep the vibe balanced. Why rates matters for you and for me? Here is the part most people miss. When the Fed raises rates, everything gets more expensive. Borrowing for a house, higher. Car loans, higher. Business loans, more higher. But here is the kicker. Market feels it way faster than you do. Tech stock. They hate higher rates because the companies like Apple, Tesla, Microsoft, they run on cheap money and future growth. When money costs more, the future earning looks less shiny. On the flip side, when rates get cut, it's like a party. Stocks pump, crypto pumps, even housing markets go wild. So the Fed basically controls whether we are in risk on or risk off mode. So how I track it? You don't need a PhD to follow this. I'll show you how I track it on TradingView. Or you can just go on a Google and search it right here. You will see all the interest rates and detail on the Google. I'm going to open the chart here. I'm going to show you all the interest rate since from 1954 to 2025. So which can help you out to understand how many percent it has been raised and how many percent it has been low. It will help you understanding this one. Every year you will see different changing in the rates, interest rate. Here you go, you see here. Now I opened this web page already so you can read it. You see here, since 1954, 1.01%. And 1955, 1.97%. In 1956, like 2.73. It can go much more higher, you can expect, but it can also go much more lower, which you don't expect as well. It depends on time, on year as well. So when the Fed, they come to announce about the cut rates, you will see how the market move. So as I said, now you see here, the chart is all about US interest rates over the time from 1954 to 2025. So here you go, you will see all the interest rate. I'm going to show you here. You see here, this is how it started from 1954 and then it went up like this. It was going higher, then it would drop to here and then it will go higher. So this is how interest rate works, okay? So you can search on any chart or you can go on a TradingView, you can search it there. I'm going to open the TradingView so you can search it. How you can search it, I will show you. Now you see here, United States interest rate. So it's one day. It will show you how the interest rate works, okay? Here you see down here. It's all about like the chart. It's actually RSI, but still you can see how it was raising and how it was going down. And to know about the Fed's cuts rate, if you're not sure when the news is coming, you can just still go on the calendar. As I said that yesterday about CPI, you can just click on it and you can select the day, you can select the date, and you will see the news come in on TradingView in front of you. Every single event you can find in calendar. If you can't find it here, like yesterday, I'm repeating again this one, you can go on a Forex Factory where you can check the news about the Fed are coming to release something like they will talk about interest rate or they might cut their rates. So same way you can just add into calendar. I'm going to give you an example here. This is how you can add the date into your calendar, and it will remind you like today is going to be a day where you can see the news is coming, and so you can just before you take a trade, you can check the news, and then after that you can just go into the position. So there are different type of interest rate in the US, right? Or you can just follow economic calendar there. So you will see Fed meetings, dates. You will also hear about something called dot plot. Like basically the Fed members guessing where rates go. So basically the Fed member guessing where rates go in the future. I don't take it too seriously, but markets do. And if markets care, I care as well. So here is my routine. CPI members come out, I check market react. Then I immediately look at the Fed's next meeting date. As I said, you can check into calendar. But after CPI, once you check about the CPI, then you can go on the calendar and check the Fed, and you can check about the Fed next meeting date. That combo tells me if I should expect volatility or if the market just chilling. So if I go on a Nasdaq chart, and I can show you there, like after the Fed cuts the rate, how it affects on the market. So I'm going to Nasdaq chart. I can show you here. Let me show you. Let's talk about this because I'm not going back to last month. I'm going to just show you here about this month so you can understand. So now you see here, this is Nasdaq chart. So today there was some news which was actually coming out about Feds were about to talk about cut rates, and then right after that, how the market moves. You will see how it goes higher. Okay, I'm gonna mark it down so you will understand it. So you see these pullback after these big drops. You know, there is always when you hear the news, the market go up faster or market could go down faster. So once the news announced or news released, you will see the market changed. And right after that, then the pullback is start to go back to the normal routine. So like, for example, if the market after news release, it will come down for one or two big candles. Next thing gonna be happening, it will go back to on an original position. Like if it was a bullish trend, it will just go straight to the bullish. So you can just take a position right after the news release. You will know how it works. So yeah, this was the chart about the Nasdaq, as I said. So here you see these are the interest rates. You can see how it was going up and it was going down along the time, like since last year, or you could say like since 1996, higher and then lower, higher, then it's lower and then more lower, and then high again. Now we are here at this point. So this is the chart for United States interest rate. You can go, you can search it, and you will find it here. Okay, it's going to be on the daily rate. So after the chart, now let me tell you, higher rates crush growth stocks. Now check this rally. As I said, like I've been explaining it to you, that was when Powell hinted they might pause hikes. Instantly, the market went okay. Cheap money might be back soon. That's how real time this is. You don't need to guess, just read the announcements and match it to your chart. You will see the patterns. So look, if you only take one thing from today, it's this. Don't ignore the Fed. You will see the patterns. So look, if you only take one thing from today, it's this. Don't ignore the Fed. They are literally the biggest market mover out there. If CPI is the signal, the Fed is the decision. And the next time you see everyone hyped about some random stock on crypto or crypto, ask yourself one thing. What's the Fed doing? If you get that right, you're already ahead of most traders. Stick around. In the next video, we are breaking down jobs reports and why unemployment numbers can tank or pump the market overnight. That's another big macro key you will want to be mastering. So if you haven't subscribed my channel, please click on the subscribe button and like and share this video.